Hello, Nashville. I am Beau Beach, and this is the What You Need to Know podcast, where we are going to catch you up on the past few weeks of commercial real estate news in Nashville and the Southeast. I, of course, am a commercial real estate broker. I specialize in listing and selling commercial real estate. So, all of the content that we provide you on the podcast really comes through that lens of understanding the commercial sales market. I will tell you today's podcast is going to be shorter than usual. You know, as we prep for the podcast, I turned down a lot of the stories. I just didn't think they were worthy of your time and attention. So most of the deal specific content got thrown in the garbage. We're going to talk more about broad-based macro ideas in today's show. We'll discuss a few deals that I think are worthy of you. But I would tell you that, going forward, we're really going to try to focus on those deals actually getting done. So much of the commercial real estate market is, people presenting their ideas, right? I don't own this parcel yet, but I've got it in contract, and here's my idea of how I want to use it, right? So many of those ideas never happen in real life. Talk is very cheap. Getting something actually done in our market is much more impressive. So we're going to try to steer away from, those dreams. We're going to try to stay away from the dreamers, and we're going to try to focus more so going forward on the guys that are actually getting it done, the executors, people that are executing in the market. Okay. So, so maybe the content changes a little bit going forward. Maybe it's less entertaining. Maybe it's shorter in nature, but maybe it's a little bit more helpful. I'm kind of a no nonsense guy. I kind of want you just tell me what I need to know in as few words as possible so I can get on to my next thing. And that's kind of the perspective we're going to take with this podcast going forward. Okay, so let's get into it. We're going to start with a 2025 year in review. How did last year turn out, and what does it tell us about 2026, right? The commercial real estate market turned a definitive corner in the fourth quarter of last year, posting its strongest volume in years, volume meaning number of transactions that actually closed. Transaction volume ended at a 23% increase over 2024. So in concept, 2025 commercial real estate sales were 23% higher than in 2024, right? More properties sold, 23% more properties sold in the last year than they did in 2024, right? Now let's break that down by property type. Apartment volume up 9% last year. Retail volume up 26% last year. Industrial volume up 15% last year. In office volume, the biggest surprise, up 26% last year. But despite the sales uptick, the sector isn't out of the woods yet. Office accounts for nearly half of all distress in the U.S. market. The sales recovery is likely driven by lenders and owners finally capitulating to market clearing prices. Now, two other takeaways from last year. Lenders are feeling better. Lenders are comfortable lending to even the most criticized property types again, evidenced by a 181% annual bump in office lending. Also, we must acknowledge that distress is a slow-moving phenomenon. Outstanding distress climbed, but the wave of foreclosures hasn't hit the market. Instead, workouts are increasing. Lenders and borrowers are finding solutions, preventing a widespread forced selling event. And I think that's really what made the last couple years feel a lot different than like the 2011, 2012 era. 2011, 2012, There was a lot of distress, and lenders were acting on that distress. They actively foreclosed. They actively took properties back. And then after they took them back, they resold them at the market clearing price. And that hurt. That hurt a lot of lenders back then. That aggressive strategy perhaps didn't make the most sense in hindsight, and lenders have adjusted course this time around. Instead of being very aggressive about taking those properties back, they have chosen, at least thus far, more often to work with those borrowers to find a way through it without taking back the keys. So those are the takeaways from the last year. Everything is trending in the right direction, right? Volume is up. Lenders are loosening up. 2026 looks like it's going to be the best year we've had in quite some time. We're arguing with our clients, not arguing, we are suggesting, we are selling the idea that 2026 is going to be the strongest year to be a seller since 2022, right? 2021, 2022, those were the years where making money was easy, right? And then things slowed down pretty substantially and have been ticking back up since then. We think 2026 is going to be a great year to be a seller. Let's quickly talk about the January Fed meeting. If you listened to the last podcast, we told you don't expect any type of interest rate cut at the January meeting. We were absolutely correct in that regard. There really isn't a whole lot to talk about there. I will tell you that the next cut is a question of politics, not economics. Powell is no stranger to accusations of political influence, and he clearly is not a fan of the current administration. There is a world where the economics say cut, but Powell chooses to push for no cut for reasons beyond the economy. Even if politics impact the rate path, Powell will be out of his post this year. Rates will come down, and QE or QE light will help pull interest rates lower. So his replacement has been nominated by Trump. We'll have to cover him on the next podcast, assuming that moves forward. He seems to be a pretty interesting character, very different from the current chair, Too Late Powell. But if Powell does choose to play politics in the coming months, just know he is out of that post later this year. In the next podcast, I'll make a note to bring you up to date on those specific dates for the next meetings, when Powell will be out, and we'll update you on who we think his replacement is going to be. Okay. Next, Vanderbilt seeks $250 million for a planned Florida campus. And we've covered this in the past. And as I read about this is shocking to me, because it seems to me that we already have too many colleges in this country. We are very much overbuilt for colleges. The value proposition for going to college has never been lower, right? But yet Vanderbilt seeking to create these satellite campuses, not only in Florida, right, but also in New York City and Manhattan. And my understanding is they're even targeting San Francisco for one of these satellite campuses. But let's focus on West Palm Beach for now. Located on 7 acres in downtown West Palm Beach's Government Hill area, the university donated the then government land valued at $46 million for 7 acres in West Palm Beach Government Hill area. Listen, I've spent a lot of time in West Palm Beach. I ain't paying you $46 million for 7 acres in a government area. I know that. I don't know how we got to that valuation, but supposedly they donated land valued at $46 million for this campus. The future VU campus will accommodate graduate business programs and serve as a satellite campus for the Owen Graduate School of Management, School of Engineering, and AI programs, as well as host an innovation hub. The development will involve about two, excuse me, the development will involve about 520 million in direct VU spending to develop the site with various academic buildings to accommodate 1,000 students and approximately 100 faculty members. This is a real head scratcher for me. I don't get it. You're going to spend 520 million to service 1,000 students on a satellite campus in Florida. Quote, what we aim to create here is not just another graduate campus for business and engineering. We are creating programs that reimagine business and engineering education in the age of technology. The university will open its Manhattan campus for the fall 2026 semester. In addition, Vanderbilt this week announced plans for a presence in San Francisco. So Vanderbilt just going crazy. You know, I don't get it. I don't get it. Historically speaking, folks that work in higher education aren't particularly I don't want to say bright, don't have real world knowledge that is very impressive, right? It's all theoretical, you know. Perhaps we have overlooked some of the changing dynamics of our world today. And perhaps as a college or university, spending $520 million to service hypothetically 1,000 students on a satellite campus in another state is a little bit crazy. I don't get it. I don't get it at all. But I also don't get the pull of going to college besides the experience. So if you're really going to college for the experience, why are you paying them $50,000 for that? It's not like the classes are providing the experience. It's the people and the environment and the place that you choose to live that provide you with that experience. I'll tell you, I am not paying for my children to go to college, and this is coming from a guy that went to college, went to graduate school, got an MBA, did all of that stuff, played the game, played it real well, left there with the resume that everybody dreams of having. And I will tell you, I was still incredibly unprepared for the real world. And all of that conceptual learning, I'm just not sure it was even that valuable. And back then, the cost of college was so much lower. The cost is getting so outrageous. This idea that you're going to go into debt, hundreds of thousands of dollars, and then enter the job market in extreme debt without any real practical, valuable experience. You just have this piece of paper that says you were responsible enough to show up for classes and pass some exams. The real world, you don't get paid for passing exams. The idea that you're going into debt finance that experience that isn't going to benefit you that much in the real world when you're done, it just seems to be a huge miscalculation. My children are all, I would say, impressive athletes, and impressive athletes are getting paid to go to college now, and that's basically what I told them. I said, if y'all want to go to college, that's cool, but they're going to pay you to go. We aren't going to pay them. And if you really want that experience, we can move you to a college town. Go live in a college town, have the college experience, maybe operate a little business on campus, have a little hustle, make some money. So when you leave that experience, right, at minimum, you're not in debt. Maybe you put a little money in the bank. Maybe you bought a property while you were there. Maybe you bought a 5-bedroom house and had 4 friends live in it and pay the bill for you. And then maybe when you leave, you sell it for a profit and you put $100,000 in your bank account and you start your professional life with $100,000 in cash in your bank account instead of $100,000 in debt. And I hate to tell you, I think most people leaving college are leaving with a lot more than $100,000 in debt, which is just bananas to me. So this idea that Vanderbilt has the guts to be expanding satellite campuses all over the country, I don't get it. I don't get it. I hope it works out. I root for Vanderbilt. Vanderbilt, you could argue, had one of the best uh, years ever for any college in the country for athletics. They put together such a resume for athletics that they might be the top school for athletics in the country this year. So anyway, I got a little bit off topic. Let's keep moving here. I will tell you, we're going to cover 5 more stories. So I told you this is probably going to be one of the shorter podcasts we ever do. And that's just because I don't want to fill it with nonsense that you don't need to hear. Okay. The hidden challenges of converting office buildings, right? So one of the big trends in Nashville, more so than a lot of other cities, is we've got office buildings being converted to other uses. I've been involved with selling some office buildings that were slated to be converted to other uses. And I can tell you, it's very, very difficult to do. First of all, you've got to buy the office building for pennies on the dollar relative to what it would cost to build today, right? It's replacement cost. So you have to have this unique situation where usually the lender on the deal is willing to take a big haircut on what they're owed just for this to even be possible. But even then, you've still got real world constraints that you're working up against, and that's what we're going to talk about now. Nearly 2 million square feet of Nashville office space is converting to hotels. Developers face complex challenges, including plumbing, floor plates, and structural issues. Lenders show increased willingness to fund conversions after initial hesitancy, right? Nearly 2 million square feet of Nashville office space is planned or underway to be converted into hotel space. Quote, it's Pandora's box. So when you open it up, you need to know exactly what you're buying because a small mistake can turn into millions of dollars worth of additional expense. But the idea of buying something that is 20, 30, 40% cheaper than building it, and you don't have to start with ground up construction, there's a significant benefit to doing that if you have the floor plates that allow you to convert it. Nearly all of Nashville's conversion projects have started out with a heavily discounted sale. Fifth Third Center, Phillips Plaza, Parkway Towers, and Citizens Plaza all saw huge slashes on their sales price in the last year, which is the first step towards a successful conversion project. There are several factors to be considered when determining whether or not an office building is right for conversion. They're looking at the floor plates, ingress, egress, number of elevator shafts that are already there, how we're dealing with utilities. The major thing is your plumbing. What are you doing about plumbing? Because you've got to figure out how tall the ceilings are, what you have above the ceilings, because doing core cuts in those big old concrete buildings are not the most fun thing, not the cheapest thing either, right? So what they're saying is, if you're converting an office building, usually you convert office building to some type of housing, right? In other marketplaces, these office buildings would be converted to apartments. That would be the normal way to convert an office building. But because we're in Nashville is an anomaly. All 2 million square feet are targeting hotel rooms, right? So hotel rooms are small. They're compact, and every one of them has got a bathroom, right? So you might have this big floor plate used for office space, and you've got one bathroom, right? The bathroom is in one location. So the plumbing is in one location. Now you're going to have bathrooms every 20 feet, all the way around the perimeter of the entire building. So how are you getting that plumbing that is only in one location now? How are you getting that into those 20 or 30 different locations on every floor, right? So that's what they mean by plumbing being a big problem. The other thing that I've seen really screw people up is, fire life safety, right? So if you got people uh, occupying space as an office, the fire life safety requirements are different than if you've got people actually living there, right? So an office building, for example, when it was built, may only need one staircase for an exit, right? But now, if you're living there, you might have an elevator, plus you've got to have two different staircases, because what if one staircase has the fire in it? You've got to have an alternate staircase for evacuation. So stuff like that. There are many different rules for housing than there are for office, right? So when one really takes a look at everything that goes into converting an office building to a housing use, and I would argue that hotel is actually a more difficult conversion than just a traditional apartment, because of just how dense and how tight you're fitting in there, how many different units you're fitting in there, all of which with its own bathroom. you know, it's tough. I mean, you're basically going down to the shell. So you're going to have millions of dollars of demolition in that building, where you're going back down just to the shell. You're getting the outside walls, you're getting the floor, you're getting the ceiling, and you're getting the elevator shaft, and everything else is getting demolished, and you're starting over, right? It's a very difficult thing to do. It is a very scary thing to do. And historically, it's been a very difficult thing to finance because it's hard to price. Most of these banks want to know exactly how you're going to do it and have a hard bid for what it's going to take to get there. And many of these contractors, when you're asking them for a hard bid for a crazy project like that, those numbers are going to be high. And it's historically been difficult to get those types of projects to pencil out, get financed, and they don't ultimately move forward. So, when you hear, oh yeah, let's just get rid of office buildings, convert them to different uses that we like more. Yeah, that's all fine and good, except that it's very, very difficult to do. It takes a high degree of skill, and just financing it is a difficult obstacle. Let's keep moving. Nashville industrial market ranks among the top in the entire U.S. Nashville ranks second nationally in big box industrial leasing activity. The city has 3.4 million square feet of industrial space under construction today. Nashville's industrial vacancy rate ended the year just above 4%. Nashville ranks in the top 3 industrial markets in the U.S. for leasing activity in both small bay and big box industrial space. The new report puts Nashville at the number 2 spot for overall performance in the big box space and number 3 in the small bay space. So just think huge buildings, smaller buildings. We're number 2 for huge buildings. We're number 3 for smaller buildings. Nashville saw nearly 779,000 square feet in industrial space absorbed last quarter, and vacancy continued on a downward trajectory, ending the year just above 4%. So absorbed means space that was vacant or built. It was vacant at the beginning of the quarter or just came online during the quarter and was filled by a tenant. 779,000 square feet of space got absorbed or are occupied just in the fourth quarter of last year. Nashville has seen more inventory growth relative to other markets, even for small bay product, but the demand has also been there to meet the new product because of the demographic growth that Nashville has seen over the last few years. The average asking rent for Nashville industrial space came in at $10.30 per square foot at the end of 2025. I will tell you that's very affected by the huge industrial buildings. The huge industrial buildings rent for much less on a per square foot basis than a smaller building would. We've got some property for sale in Nashville. about 10,000 square foot. Let's call it 10,000 square feet. The asking rent on a property like that is $25 per square foot. So I would tell you that $10.30 a square foot is misleading because you probably got 500,000 square foot buildings in there that are pulling that average down. So I'd want to see, what is the rent per square foot for this size space? What is the rent per square foot for that size space and for that size space? The bigger the space, the lower the rent, right? Civil constructors pay $6 million for a Brentwood building. So I like this story because there's been a little bit of distress in Brentwood, and we've covered that distress. And I think that has been a little bit misleading, right? So let's clear that up today. Franklin-based site grading utility contractor will relocate its office to Maryland Farms. A two-story Brentwood office building sold for $6 million, located in Maryland Farms at 110 Westwood Place. Civil Constructors will be the sole tenant of the currently vacant 24,000 square foot building. The transaction is equivalent to $246 per square foot, which underscores the continued demand for well-located office space in Brentwood. Founded in 1994, Civil Constructors operates at 425 Downs Boulevard in Franklin today. Quote, while the office market overall has faced headwinds in recent years, this transaction highlights renewed confidence for well-located assets in this supply-constrained submarket. Brentwood is one of the tightest submarkets with vacancy at 13.8%. Brentwood has seen no office building deliveries during the past year and has no future construction in the pipeline. So the knock on Brentwood is that it's older building stock, right? There's nothing being built right now. There's nothing planned right now. There's nothing that came online recently. So everything's a little bit older, but the stuff that's there is doing pretty well. $246 per square foot is a nice price for a single tenant office building like that one. And I just thought that was interesting enough to bring to you because we often cover the dramatic stories, right? The stories of someone loses the building to their lender, the story of they are forced to sell for a loss, and here's why. I would tell you that is not representative of Williamson County. That's not representative of Brentwood. That's not representative of Maryland Farms. It happens. Every situation is tough. When you've got a lender involved and you have a vacancy issue, there's ways for those deals to go sideways. But I would tell you that I do think Brentwood, in terms of its office building market, is on good footing. A street collapse stalls development. I think this story is worthy of you because one of the themes of the pod is really making it clear how difficult the business we're in, right? These guys that are developing properties, that are buying high-priced land, and then actually getting it built and occupied and reselling for a profit is extremely, extremely difficult. There's always ways for those deals to fall apart. This one is a head scratcher, right? A Gulch project that was stalled during construction after a street collapse is now back on track. Society Nashville, a 16-story apartment tower on Division Street, has begun pre-leasing. The news comes 2 years after a stop work order was issued on the site when one lane of Division Street caved in due to construction. Now the first residents are expected to move in later this month. The tower offers 502 units, which is a massive building. 502 units. The firm purchased the property where the tower is located at 1915 Division Street for $22 million in 2021, right? So that sounds like a 2021 deal. I've heard guys say we're never going back to 2021, 2022 prices for land. And they might be right about that. But can you imagine $22 million for the dirt to build on 5 years ago, right? So one way or another, you're carrying that cost for 5 years. During that process, the construction is halted because the road in front of the building collapses, right? You keep pushing, you keep pushing, you keep pushing. Finally, 5 years later, you're working on this thing for 5 years. Your 502 unit tower that you've been negative cash flow on for 5 years is finally opening to residences so you can get that first tiny taste of positive cash flow. Unbelievable. You know, you've really got to have deep pockets to get these projects over the finish line. And you just hope when you do, the market value of what you created is more than everything you got into it, plus a little bit for yourself, because that is an extremely difficult business to be in. You've got to take into consideration so many variables, I guess, including the street in front collapsing. Okay, let's keep moving. We're going to end on our last story. I told you this was going to be a quick one today. What local developers are saying about our current market. Nashville commercial real estate market is setting into a new normal, and it's time to reset expectations. What happened in 21 and 22 is never going to happen again. So, this is one man's opinion, right? But what happened in 21 and 22, where it was easy to make money, where people were paying $22 million for the dirt to build on, is never going to happen again, says this developer. The biggest thing we've seen that's changed in the last 6 to 12 months is the banks are really loosening up and getting more aggressive. We've been able to do 2 deals over the last 6 months, and it's been a little better terms than it was 2 years ago. We've talked about that. You know, the biggest challenge in our market for the type of assets that we list and sell has been the availability and cost of financing. You've heard me say that 1,000 times. Demand is driven by several buckets. First, industrial. We continue to see a lot of demand in industrial, especially those users tied to population growth. Nashville is not slowing down. Second, retail. What we're seeing is this necessity-based retail. Medical retail, urgent care, food and beverage. We're also seeing some entertainment and fitness companies coming into town. The vacancy across the retail submarkets remains very, very low. So there's obviously opportunity for us, and we're going to keep our eye on that. 3, office. In office, we're seeing a lot of movement with law firms, financial services, and healthcare, but tech is very much slowing down, right? So those are real similar to the themes we just talked about from the results from 2025. How are construction costs trending heading into this year? Costs planed off in the fourth quarter of last year. The bigger concern before that was lead times on your equipment, your switchgear, your HVAC, things like that. That has gotten much better. So we're not having to start thinking about that a year and a half in advance like we were before. Also crazy. You know, imagine paying $22 million for some dirt to build on, and then having these imbeciles in the federal government shut down the economy to the extent where you have to wait a year and a half just to get the equipment for the project. Which Middle Tennessee submarkets feel the strongest going into this year, and why? There are different submarkets for different sectors that we're paying attention to. Murfreesboro, from an industrial standpoint, they've got the logistics, the population, affordability. That's where there's some opportunity. Retail, we're looking at Mount Juliet in Wilson County, Franklin, Cool Springs, Brentwood. That's still a high income area. We're seeing more office trend that way. Even Green Hills and Belmead have a lot going on. Finally, you've got to talk about the fringe of downtown. We're seeing Wedgwood, Houston, Neuhoff and Germantown, Nashville Yards. There's all these really cool things happening right outside downtown. There's just tons of opportunity in Nashville, but I think for the different submarkets, it's kind of sector specific in terms of where we go next. So, you know, I think that's really what it's going to come down to in 2026. You know, there's going to be a net positive. It's going to be a net positive market, right? But that is not going to be spread evenly over every location. That's not going to be spread evenly over every property type. You know, there are going to be winners and losers, net winners, but there's going to be some losers too. And I would tell you, if I had to bet on a segment that was going to be slower than the rest in the coming year, I would bet on land sales being slower than the rest. There is a glut of land on the market today. And I will tell you, most of it is priced at very aggressive levels. So I think you've got a market that is just awash with overpriced land. I think land is going to be a very difficult asset to get sold unless you are really trying to adjust to a market clearing price, which most people are not. You know, most guys I know are still thinking about what land prices were selling in 2021 and 2022. They're trying to get that today. And I think some will, you know, obviously some will, but most are just going to be waiting and waiting and waiting. I will tell you, we did an analysis on this not long ago. And forgive me if I've shared this on the pod. I'm not sure I have. We looked at all of the properties that are available for sale in each of the counties that we, 6 counties that we really prioritize. And huge amounts of those available properties were land. I will tell you the most egregious was Wilson County. 80% of the commercial properties on the market for sale in Wilson County are land. Only 2 out of 10 commercial properties for sale today in Wilson County have an existing building on them. There is land for sale everywhere. And what's interesting too about Wilson County in this example is they are very, very underbuilt on retail, for example. You know, there's not enough retail. But for whatever reason, that the land that's for sale is not getting purchased and retail being developed there. And I think it's just a function of the cost of the land, the cost of construction, and the rents that can be generated there. It's still kind of a risky proposition until those land prices come down and it becomes less risky for the developer. I think you're going to see a big, big mismatch in Wilson County going forward. That would probably be the worst market in Middle Tennessee to be a land seller. I know because we're trying to sell some land there right now. So I think I'm going to leave it at that, y'all. I told you it was going to be short and sweet. We took our hour podcast down below 40 minutes for you all. I hope you appreciate that so we can get back to work, making money to support our families or whoever it is that we love. This has been the What You Need to Know podcast presented by Beechwood Commercial Real Estate Brokerage, your broker if you are a seller of commercial real estate in Nashville or the Southeast. I am Beau Beach. I'd be happy to have a conversation with you about your specific property when the time is right. Thanks so much, and we'll talk to you soon.